The news that US inflation cooled more than expected affected not only the foreign exchange market, but also the energy one. A stronger dollar across the board eventually led to higher oil prices that rose about $83 per barrel. Once again, we are witnessing an inverse correlation between the dollar and other financial instruments. This comes as no surprise given the importance of the greenback as a means of international payments. Also, we should bear in mind that a huge number of positions in financial markets are opened with the borrowed funds. So, dollar funding costs, which are affected by the level of interest rates, will have a direct impact on the price of each and every instrument. Yesterday's data on inflation finally convinced the market that the US Federal Reserve would raise the key interest rate by only 25 basis points at the next meeting, which spurred optimism in the market. However, there are already signs of a pullback, so oil prices' upside potential remains limited. Apparently, the market will now try to stabilize just around $83 per barrel. Since the beginning of the trading week, Brent crude oil futures have added more than 7%. A confident recovery in the long positions will continue if the quote consolidates above the local high of $87. In the meantime, there is a likelihood that the stabilization process may turn into a sideways move. The yellow metal was no exception and also managed to post steep gains. Notably, gold failed to break through the mark of $1,900 per 3 ounce, and this suggests that its upside potential has been completely exhausted, at least for the time being. In just a month, gold has risen by over $100. That's clearly overbought. Another thing is that there were no reasons for a correction, and no. After all, strong driving factors are needed for a continued bullish run. If there are no fundamental factors contributing to its further gains in the near future, gold may well quickly return to the level of $1,880 per 3 ounce, trying to get out of overbought territory. Meanwhile, the ruble showed a muted reaction to the US inflation data. Locally, the dollar fell just below the mark of 67 rubles. Shortly after, it returned to the area of 68 rubles per dollar. Such behavior of the ruble has become a common thing in recent times. The Russian currency is still highly vulnerable to political factors due to a huge number of sanctions and counter-sanctions. Thus, the impact of macroeconomic statistics, even US ones, is short-lived. For now, there is a lull in terms of news releases affecting the Russian currency. Interestingly, the ruble spent the past year trading upwards under such conditions, and this can be attributed to retaliatory economic measures. Nothing has changed in this regard. So, if the market remains quiet in respect of strong fundamental factors, the ruble will most likely continue gaining value at a slow pace. In this situation, the focus of traders will be on the way the price will behave in the area of 67 or 68. If the price fixes below these levels, it will slide to the 65 or even 60 rubles per dollar mark. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.